Are we heading towards World War III, or has the World War already begun with the Russia-Ukraine conflict? As the global picture becomes increasingly complicated, how will the commodity market and precious metals behave? We'll reassess this and more in this video. Let's get started. You know, I've been conducting periodic analyses on World War III and wars throughout history because international politics, global affairs, and international relations have been one of my areas of greatest interest since childhood. It's beneficial to keep track of what's happening all around the world because the relationships between currencies are closely intertwined with politics. Since economic indicators are at the heart of everything, I closely follow these signals in politics. But let's not digress. As I've mentioned many times before throughout history, when a country loses its global leadership, it has often followed a pattern. First, currency wars start against other competitors, usually with two rival countries. Then, these currency wars can evolve into trade wars, and from trade wars, they can escalate into actual wars. This pattern has repeated itself from Portugal to the Netherlands, from France to England, with the biggest leaders of their respective times. The holders of reserve currencies often shift to other countries during this competition. So, there's no reason why this wouldn't happen again. Hence, last week's headline in the Wall Street Journal caught our attention. Are we headed for World War III? When we look at the content of the article, it actually touches on the conflicts within the United States related to its own values. But the real question is, are we in the midst of World War III? Are we heading there, or are we not? They've explained it quite well. On the other hand, there is an article in Foreign Affairs about the Chinese leader preparing his country for war. When we look at it, the date of the Chinese leader's speech is in March. Therefore, is this news being prepared as if it were new information? Is there a preparation to guide us in that direction, or is it just an attempt to raise the tension? As for whether we are in the midst of a war or whether it has already begun, I will discuss this in more detail in another video. But I'll briefly mention that WMIDDELKOOP, the famous commodities trader, stated in an interview that we are in a financial sense within World War III. Detailed information on this is available in his tweet. Now, if we turn our attention back to gold and silver, in recent weeks, we mentioned a significant decrease in gold reserves in China. This week, we have information regarding silver reserves. Take a look at the Shanghai futures commodity market. Silver vaults are gradually emptying. I mentioned this a few weeks ago, and the trend continues this week as well. Meanwhile, Mexico, the world's largest silver producer, has reached its lowest production levels in the last 4 years. Consequently, production is decreasing, and demand continues to rise. So why isn't the price going up? I've explained this numerous times. There is incredible manipulation. If you only consider American trading hours, the price of silver should be around 14 cents today. However, when you look at silver trading outside of American hours, the price should be around $300. Hence, there is such abnormality. Neither of them is normal. Manipulation of silver means controlling gold through the silver-gold ratio. When you control gold, you can conceal inflation because the world's oldest currency, gold, is tracked through it. In reality, when the price of gold rises, it is known that inflation is inevitable. So, from that perspective, manipulating silver and keeping a lid on gold means controlling inflation. We know that the owners of reserve currencies occasionally manipulate this, but they sometimes lose control, as we've seen before. Now, it seems like we're approaching one of those times, but we're trying to catch it from some of the graphs. Finally, take a look at this chart: silver versus Nasdaq, the valuation of silver against Nasdaq. Should you invest in silver at this price, or should you continue investing in Nasdaq? It's your call. If something has strengthened in the same direction, it could continue to strengthen, but in this chart, it seems like silver has hit rock bottom. Selling Nasdaq and buying silver might appear more rational according to this chart. However, when will the turnaround begin? Since Nasdaq has started to decline, some signals have started to appear for silver. Let's analyze the charts further. Let's get started. Gold is at $1,948. As we have been tracking, it was above $1,900 and $1,910 below. We tested $1,948 during the week but couldn't break through. We came down, but we didn't go too low. We closed around $1,924 before dropping below $1,910. I still believe that this range is significant. As long as we don't break above $1,948 or fall below $1,910 and $1,900, the sideways trading will continue. However, a directional breakout is imminent, and the likelihood is much higher to the upside. Downward breaks would pique my interest in increasing my physical positions as a potential buying opportunity. But of course, we'll keep a close eye on it because, as I mentioned earlier, there has been manipulation in the screen price for years. However, there is no change in the long-term chart. We still have $1,948 and $1,900 as the levels to watch. A massive cup and handle formation has developed within this range, and if there is a breakout to the upside, a weekly close above $20.75 will signal the beginning of significant movements to the upside. There are potential short-term targets above. For silver, my new tracking levels are $23.70 and $22.82. We went up to $23.70, saw it, and then pulled back during the week, but we closed the week at around $23.50. Silver was quite strong during the week. There was a slight pullback to $22.82 on Thursday. We'll see if it was an opportunity or not. Closings above $23.70 could push the trend upwards. The significant resistance levels to watch above are $24.60 and $25.55. These are the last resistance levels before a big journey. However, if it comes down, we will closely monitor $22.82. In the bigger picture, for silver in the long term, as you know, we have some major targets. I've liked silver since it was at $11, and we discussed that there would be resistance around $30. Later, we followed the trends and formations. Now, $23.70 is crucial. Weekly closings above $23.70 would be the initial signal, but the real breakthrough should be above $25.55. Until it surpasses this level, we may think that this range will continue to extend, and there won't be significant movements. However, from another perspective, it seems that there have been two different inverse head and shoulders formations in the recent pattern. If those levels, around $25, are broken, there will be separate formation targets, which we will consider. For now, I wanted to point this out. Gold-silver ratio, as you know. It has been moving sideways for weeks, months, going back and forth. It looks like it's about to break, going up, and there's manipulation going on there. My trend following level is 82.20, and we broke below that, but the crucial level is 78. If we break below that, a major move will begin. We haven't seen that signal yet. If we do, we'll emphasize that the movement has started, but for now, it's wise to position ourselves in precious metals with an upward bias. Above 82.20, things might stall a bit more, in my opinion. As for wheat, my trend following level is $573, but it has formed quite a bottom here. Look at this chart, it's starting to resemble a cup and handle pattern. According to technical analysis, it had touched $1,328 back in February 2022, and now, after a year and a half, it's hovering around $560 to $570. Closing above $570 could signal a daily trend, but the possibility of dropping to the bottom is quite high. Let's see how many more times it will challenge the downside. Brent crude, as you know, continued its pace last week. We hung around $95 for a bit, and pulled back to $92.50. $92.50 is now my level to watch. As long as we don't go below that, we are within the target movement of $103. Closing below $92.50 could change the scenario, but the formation seems to be working for now. So, we need to keep a close eye on $92.50 because if oil breaks upwards, it means stagflation is officially continuing. A downward break, on the other hand, could potentially lead to a recession. Natural gas, as you know, has been under downward pressure. My trend following level there is $2.71, and if it breaks above that, please take a look inside this band. There's a strong trend line that keeps getting tested, and it's quite congested around $2.58. A break below $2.58 might mean more consolidation and a further dip. However, in the long run, I find natural gas to be cheap, but if it goes below $2.58, it could extend the process. So, please keep a close eye on it. If it breaks above $2.71, there could be daily closing signals, and we're getting closer to $3. We're still in this trading band, but a break below $2.58 could signify a final dip in this band. You know we had dropped to below $1.90 from $10 earlier, and since then, it's been hovering around $3, even reaching $2.50. So, we are within this band, and please pay close attention to the support levels I've mentioned. Uranium continues to hold its strength. Last week, we had a slight pullback, but there was quite a recovery on the last day of the week, and we closed the week at $43.80, above my trend-following level. As long as it stays above that level, I believe there's a chance for a major medium-term move towards $60, $70, and $77.77. Uranium is something I've been quite fond of as an alternative energy source, and as energy prices rise, especially due to conflicts in Africa, there's a possibility of uranium's upward movement continuing. It's essential to keep a close watch as long as it remains above the trend-following level. EURUSD, as you know, has been testing the downside. We've been emphasizing selling as it approaches 1.08, and we've been saying that for a few weeks now. We first mentioned 1.08 a couple of weeks ago, and last week it was 0.770. My trend-following level is now 1.0737, with the 200-day moving average at 1.0791. Unless it breaks above these levels, the direction remains downward, but if it manages to turn around, things could change. So, the macro scenario suggests that the euro may continue to move downward, but don't stay in a short position above trend calendar levels because there could be further consolidations. Pound USD has been going upward for a long time, and we've been saying that it would eventually come down. Now it seems to be breaking down quite forcefully. This week, the Bank of England failed to raise interest rates, indicating their weakness and the fact that we've fallen into a big recession, a major stagflation. They needed to raise rates, but they couldn't. So, it signifies their weakness. The 200-day moving average at 1.2470 and my trend-following level below 1.2340 are critical. As long as it remains below those levels, there's a possibility of hesitation and a change in direction. EURJPY. I trade it periodically, and there seems to be a significant peak forming there. I think unless it breaks above 159.75 or 159.60, we might see a reversal in EUR-yen. It's currently moving in short-term bursts, both up and down, and I'm trading it accordingly. But I consider the possibility of a turnaround quite high as long as it doesn't breach those levels. And finally, I want to take a look at the American 10-year Treasury yields because, as you know, the market often tells us that if American 10-year yields go up, gold goes down, and so on. You see, I've been talking about American 10-year yields going up since they were at 0.64. I've been saying they're going up, and indeed, they've been moving higher. Of course, there have been periods of rest and sideways movements in between. Now, let's consider the long-term perspective again. Back in September 2020, when they were at 0.64, we said that American players would move upward by at least 4%. Now, to update, if they stay above 4.27, there's a possibility of the formation in American 10-year yields heading towards 5.12 to 6.15. But closing below 4.27 for now could mean more consolidation. Please note that since this is a very long-term chart, the levels I'm giving you are crucial. In a shorter-term perspective, as long as it doesn't close below 4.27, American 10-year yields may continue to rise. However, when it goes up this time, there could be different scenarios, as I explained in a previous broadcast. Regarding the DXY Global Dollar Index, which includes the euro, pound, Swiss franc, Japanese yen, and others, historically, when it goes up, we've seen gold and precious metals go down. But this time is different because we're in a world where the division between the two poles is becoming more distinct. DXY is losing its old significance with its currency, and new relationships are emerging. Therefore, we see that the correlation between gold and American 10-year yields is breaking. Moreover, due to distrust, America may not be able to borrow again, and as interest rates rise, DXY may lose strength. However, it could strengthen against its allies. But precious metals may gradually lose their strength against the dollar. This scenario is significant, and that's why I keep talking about holding some precious metals in your portfolio, especially for short-term trades. I wish all of you to be very cautious during these challenging times, and I wish you profitable and fantastic days ahead.